In order for you to make money trading meme coins, you have to be aware of the fact that there is a lot of risk involved, and your ability to be able to evaluate risk is going to be the determining factor as to whether you are going to be successful in this meme coin trading journey that you have embarked on. And this is one of the reasons why in today's episode, I really want to sort of demystify by giving you the blueprint on how you are supposed to conduct your risk assessment, your risk analysis, risk response, risk evaluation, and your risk mitigation when it comes to trading meme coins, because these few points are going to determine whether you're going to be able to lose all your money or end up making $1 million. Because the ultimate journey, or rather the ultimate goal for everybody trading meme coins, is you have to retire wealthy in the next 6 to 12 months. So what are you supposed to do? Understand how you are not supposed to lose money. Warren Buffett says, in order for you to make money, right, do not lose money. Do not lose your money. But how are you supposed to navigate the very deceptive nature of meme coins? Because meme coins can be very enticing. You might think a particular project is going to go 100x, but it ends up rug pulling. So what are you supposed to do in order for you to protect yourself? This is what we're going to be talking about in today's episode. Watch the entire episode and subscribe. Drop all your comments in the comment section below. Without further ado, let's get it. Ladies and gentlemen, I assume you are already part of Axiom.trade and also Sniperoo. So these two tools are going to be very important in your risk assessment and also your risk mitigation, evaluation, response. These are definitely going to really help you. So if you are not really aware of Axiom.trade, please check out the link in the description. If you haven't downloaded the extension Sniperoo.app, please check out the link in the description before we proceed. Anyhow, the reason why I really wanted to give you this amazing breakdown is it's very important for you to be able to understand how to avoid your risk with regards to meme coin trading. So one thing that I have to explain to you right before we get into the charts, because you guys are infatuated with the charts and all these other different metrics that you can use to determine, whether a project is worth investing in or not. But before we jump into all these important metrics that you can get to analyze, I just want you to understand one simple concept with regards to meme coins. So when a meme coin is created, you have to understand that there are two blocks that are very important. There's zero, block zero, uh, block zero, and block one. Okay, so block zero and block one is mostly going to be occupied by uh, the developer, the owner of the project, and snipers. Basically, snipers are the ones that are able to get in way before a lot of regular traders, due to the fact that they've got very fast nodes. They've got fast nodes with crazy speeds, and they also have the technical know-how. Okay, they've got the tech skills to sort of use trading bots that really are automated, and they can just basically get away with a lot of stuff that we regular traders can never ever fathom. You understand? So this is one of the reasons why these two blocks are going to be very important in your risk analysis, strategy. And the other thing that you're supposed to be able to understand is order blocks. Okay, so now that we have broken down the basis of our risk analysis, let's get into it. So the reason why I was bringing up block zero, developers and snipers, is these are the guys that are going to determine the initial order blocks. So basically an order block is a part of a trade that plays a significant role with regards to support and resistance. For example, this right over here is a bullish order block. Let me see if you guys are able. Let me try to zoom in. Let me get rid of my Sniperoo, and let me just sort of use my pointer to highlight that so that we can see properly what I mean. It's very important for you to understand the reasonings behind the way you're supposed to reason. It's very important for you to figure out how something works so that you can identify how to reverse engineer it and how to sort of manipulate it, because you understand the basics of how it operates. Okay, so this right over here is a bullish order block, and this right over here is a bearish order block. So the last green candle before a dump is called a bearish order block. The last green candle, the last red candle before a pump is like a bullish order block. Okay, so the last red candle before a pump is a bullish order block. The last green candle before a dump is a bearish order block. So those two things are very important because they give us the underlying support and resistance levels that really matter. So not every resistance and support level matters. Everything is built different. Is built different. Let me give you a practical example. In the world, right, we have world powers. We've got, China, America, Russia, plus some few other European countries. These are very significant because their voice really matters, because they've got, the military capabilities. They can stand on their own. They can get away with a whole lot of stuff. So just think about order blocks as those moments in a market where all the trading action really matters. Okay, so getting back to what I was saying, now that you understand an order block, right, you have to understand that these order blocks are going to help you assess your risk, and they're also going to help you avoid certain actions. The reason why I wanted to give you that breakdown is so that what we're going to discuss is going to continue making sense to you. So the reason I brought up block 0 and block 1, developers and snipers, is these two guys are the ones that really determine the flow of a particular project. They determine the lowest level where the price can go to, because they set the initial momentum of a project. Meme coins that have got very high explosive moves towards the upside usually have a very high order block with regards to the developers and the snipers. So right over here, if you see the dev selling, right, they are sort of going to be able to determine where the price should never go below. Imagine if the developer sort of sold at this particular level, right? This was their initial selling pressure point, and a lot of regular people get to buy back. It means these regular people are providing the amount of support which is needed. So if the price comes back to this level, let's say for example we have a retracement, if it comes back to this level and sort of fails to find enough needed support, what's going to happen is it's going to end up crashing, because there isn't more support, or rather much support, which is going to be able to withhold the prices. So one of the things that you need to determine when you are trading a meme coin is figure out where the developers and the snipers are in relation to block 0 and block 1 entries. Okay, the developers exit and entry really matters, because obviously the developer has got way much more advantages in terms of the amount of circulating supply that they are able to get due to the fact that they were able to buy in cheaper. And the snipers that entered after block 0 obviously ended up having a more significant and relevant role to play on the sustenance of a particular project. So there are two types of launches that you need to understand and avoid. So there are bundled projects. Bundled projects basically means other buy orders were able to get in on block 0. So if a project is bundled, it means besides the developer purchasing the very first transaction in block zero, right? There's also other wallets that were able to infiltrate block zero and they were able to get in. So a bundled project just simply means not only was the developer present, there was also other wallets that were able to like buy and get into a particular project. Okay, then non-bundled projects, which have snipers, entering on block one. These are non-bundled projects, but they are full of snipers because the snipers bought right after the developer. Okay, these guys are going to be able to set the precedence of whatever is going to happen as far as the price action of meme coins is concerned, because they are going to be able to like help you determine the most relevant order blocks. So in order for you to be able to mitigate your risks, right, you should be able to have a tool such as Sniperoo. Sniperoo is going to help you, number one, have a faster response, and also the aspect of you mitigating your risks, because you are able to sort of have trading strategies that can, number one, give you trailing stop losses, and also your exit strategy as far as your profit taking is concerned. Okay, so anyhow, moving back to what I was explaining to you, right, in terms of the order blocks. The order blocks are also going to be able to help you understand the resistance slash support levels that really matter. Remember these guys right over here, the developers and the snipers and the block zero types of people. So most projects are going to have different order blocks and different resistance support levels. Sometimes if a project has got a lot of volume, perhaps the first order blocks are going to be created at 200,000 US dollars. Let's say, for example, the first order blocks are at 200K market cap. It means if the price relatively starts trading close to these levels, it means these developers and snipers were able to like really bring the price down, or rather there wasn't even a lot of buying power. And for the people who sort of got in early, right, they are the only ones that have got enough power to bring down the price to these levels. And this is one of the reasons why it's very important for you to understand and figure out who's selling, because the amount of selling pressure which is exhibited by the developer and the snipers really determine the longevity of a project. So the number of people who are obviously going to have like a huge number of tokens for that particular circulating supply is obviously going to be either the developers and the snipers. So if these guys are really having intense selling pressure, right, they are really selling aggressively, then obviously the project is going to end up dying. And this is one of the reasons why each and every time you sort of want to get into a particular trade, determine who's selling and where and how that is able to impact the project. So for example, right over here, right, we already understand that ever since the project was created, by the way, I just picked this random project, there's nothing special about it, I'm just sort of like showing you using this particular example. So in this particular trade, right, we already understand that there is an order block right over here, which is very important, between 14K to about 10,000. So if the price comes back to this level, we are definitely going to be able to know that this project is not going to be able to resuscitate itself and it's over and done with. However, the other levels that we're supposed to look out for are these other order blocks. For example, you've got this order block right over here. You also have some more order blocks right over here, and you also have another one right around these levels. Okay, you've got another one right over there. I skipped the one below me, below this level that we just put, and we also have that level right over here. And finally, we have these levels that are beginning to form. So visually, you're supposed to, understand where the order blocks are, where the important areas of values are, and where most contracts are being sold and bought, because these are going to determine what order blocks are. So what I want you to do is go and do your research on how to trade order blocks, what order blocks represent, and you guys are going to understand what I'm talking about. So if I were trading this coin, right, number one thing that I would have to understand is market structure. Market structure needs to be held. So if you combine the ability to read market structure and also have your order blocks in place, you guys are going to be able to like determine those risky zones, the zones that you're supposed to place your orders in, and the zones that you can get away with a trade if you get into those particular levels. So based on just basic distribution and Wyckoff schematics, right, I can already tell that this particular move, or rather this particular trade or project, is beginning to lose momentum. So right now, the if the price continues to retrace, I would obviously now look to place my orders in these previous order blocks and figure out where is the next support and resistance. So for example, in this particular case, right, obviously if the price gets rejected in these levels, my next area of support and resistance is going to be placed around these levels, or even these other order blocks that were sort of created, so you can easily be able to scalp in and out. So what you need to do is you need to have your risk response set on specific order block levels. Okay, for example, if you go to Sniperoo, by the way, check out Sniperoo, link is in the description. If you don't have it, please make sure you have it. Set your make sure you set your response levels accordingly. Okay, number one, you can also set up your trading stop loss, because here if you set up your what do you call this, your trading strategy, if you go to your let me show you. So right now I'm going on the extension, and if you click on strategy, then you put your grid, right? If you set up your trailing stop loss to be a specific number, mostly I like to have my a trailing stop loss which is like at 100%, because I already know that I'm always going to be triggered out whenever I sort of go below my threshold of 100%. That really helps in mitigating for the loss, and this is an automated interface, automated platform, and so on and so forth. Okay, then you're also able to like put up your auto sell zones. You can sell at 2x, 3x, 5x, and so on and so forth. Okay, so in order for you to play it safe, right, obviously you're not going to be able to adjust accordingly, right? So as you can see right now in real time as we are talking, the price is beginning to sort of respect these order blocks. So where the price is obviously going to end up going and finding support is going to be this level. Once we sort of start losing our momentum, we're probably going to go to the next order block, and just like that. So all you have to do is figure out how to determine loss in momentum, the next order blocks, the next support and resistance levels, and also figure out where the first block 0 and block 1 selling pressure is at. If you guys are going to be able to do that, you're going to avoid a lot of rug pulls, because you're going to understand how to position yourself. So what I usually go for on a personal level is I usually go for high momentum. So to me, reading all these other things like the top 10 holders, it doesn't really matter. Whether it's bundled or not, it doesn't really matter to me, because I'm just looking at the price action for the most part, and I'm able to like put my risk and be able to sort of assess my risk. So as we talked about, right, we already know where the price is going to go to, because there's only a few places the price can gravitate towards. The previous resistance turned into support, the previous support turns into resistance, those types of things. Order blocks are going to be the levels where most of the trading is done. So obviously, naturally, the price is going to gravitate towards those levels. So the other thing that you also have to look at is obviously the number of holders. But if you use my filters, you guys are going to figure out that I am a high momentum volume type of trader. I usually only trade coins that have got a specific volume. So if you guys take your time and just basically look at my previous episodes, you understand the type of filters and why they give me specific projects that I can look at. So once I do that, now I start figuring out where the order blocks are, the level of resistance, block 0, developer snipers and all that good stuff. So as you can see right over here, using the order block principle, we obviously got to respect this level. So now let me expand it and show you. Okay, so this is the bullish order block that we had, right? So if we extend it, take a look at where the price ended up bouncing. So if you were able to understand that, okay, this is where the price was going to go and gravitate towards, right? You were obviously going to place your buy order right over here. You get in at 150 and then you sell it wherever you feel like, okay, this is where the price is going to end up going. And trust me, the price is going to end up coming back down. The price will definitely find some resistance either at this place right over here, because we've got a bearish order block right over here. Remember, a bearish order block is the last bullish candle before a downturn. So there's a bearish order block right over here, and then we also have another order block which is right over here. So this order block can also be a determining factor. So we already know where the price is likely going to go to. It's either the price gets stopped right over here, or the price gets stopped right over here. So we already understand. So right now the price is actually being it's facing some resistance here, but is this order block going to be strong enough? I highly doubt. So the price is likely going to go back there and sort of come back down to these levels, eventually drop, and then it just ends up dying. So like that, you are able to assess your risk and you've got proper response as well. So take a look at this. So as we saw, right, this order block right over here played a role. So we don't really know exactly whether it's going to end up going to this order block or it's going to just end up getting rejected here. But if we entered here, we already got our profit and we already know how to scalp it. So this was a 69% move already, and we already know where the next order block is going to be. However, I do not really like trading these lower order blocks because the lower order blocks are really weak. The reason they are really weak is due to the fact that, remember, these two guys right over here, the developers and the snipers, they have a significant play. They've got a significant role to play, and most of the times, right, once they get to sell at a very high price, regular people don't really have enough buying power to sort of hold the prices, and most of the times a lot of stop losses get triggered. So once you lose the first important order block in terms of support, right, most likely the project is going to end up dying because there isn't way much more incentives for people to hold on to it. So what I usually like doing is I buy the breakout of the first bearish resistance. So ideally my entry would be between this level, sell automatically using my risk response and risk mitigation using Sniperoo. So I basically exit. So what I'm going to do is the only thing that I'm going to trade is these levels. Okay, I figure out where the bearish order block is, where the developers are getting out. I get in and then I just simply use my trailing stop loss in order for me to sort of not face any risk when it comes to me losing my profits, and also if the price ends up retracing, because sometimes you do not really know exactly where a lot of these developers are going to be ragging. So, some people rag at 30,000, some people rag at 200,000, some people rag at 70,000 US dollars. So you have to be prepared all the time. So using Sniperoo, you are going to be able to configure your automatic, trailing stop loss, your static stop loss, and you're going to be able to safeguard your portfolio. However, if you guys are going to be able to understand how to manipulate these things that we've talked about, number one, you're going to be able to have a better chance of being able to assess your risk and be able to position yourself accordingly. Once you are able to do that, trust me, you're going to end up minimizing the number of times that you lose your money. Of course, some other people, end up looking at a lot of other different things, a lot of metrics here. Personally, I don't really dwell much on that because I usually only trade the coins that are sort of given to me by the filters that I use. So I usually trust my filters because the filters that I use give me about 60% win probability. So the other thing that you have to work on is, number one, how do you get to determine which projects you're supposed to be investing in? Obviously, filters are going to be able to play a crucial role. So understand how you are utilizing your filters, your meme coin filters. The way that I've set up my meme coin filters, the way that I've been explaining to you guys, you already understand the logic and the reasoning behind the filters that we use. Therefore, all the projects that are going to be spat out by our filters, a lot of them are going to already have like a 60 to about 75% win rate. The only thing that you're going to be able to struggle with is understanding the P&L that you're supposed to expect. So with the filters that I've been giving you, most of the times you're going to be finding 2x's. At most you're going to get a 5x, but most of the times you're going to get a 2x. If you are extremely lucky, right, you're eventually going to be able to find a 100x. But with the filters that I've been telling you guys about, right, it's very rare for you to find a 100x unless you really go for, because the thing is, most of the times, right, we are trading coins that are below 100,000 US dollars in terms of market cap. Okay, so what does that mean? If a project is less than 100,000 US dollars market cap, right, it means the amount of liquidity in a particular project is very minimal. Unless the project is very viral, it has got a very good community behind it, then it can do 100x. So you have to be realistic with yourself based on the metrics that you're using, and you have to have a mental understanding of where a particular project can likely die out. So mostly the trades that I usually trade, especially with the filters that I've been talking about, right, a lot of them usually end up having a lifespan of 250k to about 750k at most. Okay, so for me, I'm really comfortable with getting a 2x or a 5x. I already understand the longevity of a project based on the filters that I have. So what I want you to do is do self-introspection, figure out what type of filters that you have and where is the high likelihood of your projects dying out. Okay, if you do that, then you're going to be able to adjust your filters. And moreover, remember what we talked about, right? Have different trading screens. Have about 5, 6, 7 different trading screens, because your filters are going to be able to fluctuate depending on how the markets are performing. If Solana is down, right, and the volume is down, obviously have filters that really cater for lower volume type of plays. You get my point? So have filters for different occasions, different trading environments, and so on and so forth. So do not use only one type of filter. Use several filters on different screens. So make sure you invest in different computer monitors where you can be able to put different filters so that you can be able to adjust. Anyhow, that's all I had for you today. I really hope that you got a thing or two with regards to risk assessment, analysis, evaluation, and mitigation. So we obviously forgot about the risk response. So risk response is also very important and very, very important. And this is one of the reasons why I gave you Sniperoo. It's going to help you with your risk mitigation and your risk response as well. Okay, in terms of risk evaluation and risk assessment, risk analysis, this is one of the reasons why I was giving you like a breakdown of block 0, bundled, resistance, support, order blocks, VWAP. We didn't even get to talk about VWAP, but anyway, that's another topic for another day. That's all I had for you in this particular moment. There you have it, ladies and gentlemen. I really hope that was very useful, new information to you, because I really strive to give you information that you can never ever find anywhere else, because I try to go in deep as I can and just basically show you another side to meme coin trading. And I really hope that you guys really appreciate such type of effort. So in case you've got any other hacks, any other tricks as far as risk assessment is concerned, because the ideal goal is never ever to lose money. So what strategies do you use in order for you to minimize your losses, and how efficient is it? Please let me know in the comment section below. Subscribe to my YouTube channel. My name is Muna, aka CryptoHype, aka Beyond 10x. Feel free to be part of Sniper Academy. Just email me in order for you to be part of my community. Talk to you a little bit later. You guys have been awesome. Stay blessed.